What are arbitrage funds? And why must one look at arbitrage funds, especially in times like these? That's what we're going to explore in today's episode. Now, ever since the finance minister cut down the tax benefits for long-term debt funds, investors, especially who are used to getting the tax benefits in debt funds, have been looking at other alternatives. And one such alternative comes in the form of what we call arbitrage funds. Now, arbitrage funds are essentially investments that we would pit against a savings bank account to a 1-year fixed deposit. That's really the period for it. It's from 1 day to probably a year, and that's the horizon one needs to look at for parking monies in arbitrage fund. Now, first let's understand what are arbitrage and what does arbitrage funds do. Now, arbitrage is the word, as the word means, is to look at differences between two markets at any given point in time. The classical example is to look at a stock price in the cash market and look at the stock price in the derivative market. For example, ITC stock is trading at 410 rupees in the cash market and is trading in the derivatives market at 420 rupees, for example. And these kind of anomalies do happen. When the markets are very dynamic and changing all time, these anomalies do happen. When something like this happens, the fund manager will arrange to sell a large quantity in the derivatives market at 420 rupees and buy it in the cash market at 410, thereby assuring himself of a 10 rupee gain on that particular transaction. Arbitrage transactions are risk-free because the sell and the buy transactions are locked at the same time. Therefore, there are no open positions. The market cannot impact that particular investment or the arbitrage opportunity. Therefore, these are categorized as near risk-free investments for investors. Hence, they are available for short-term periods up to a year of investments. This is one single example, but they also invest sometimes into short-term debt securities merely because not all the time you will have arbitrage opportunities in the market. But the arbitrage funds do exceptionally well in times like these when there is extreme volatility in the market. There is 1 day markets are up, 1 day markets are down. These are perfect opportunities for arbitrage funds to give very, very good returns to investors. So from that perspective, they are very counter to a stock market growth. If the stock markets are doing well and you have all your money there, you'll make a lot of money. But if for some reason stock markets are choppy, then arbitrage will be a great place for you to look at least some portion of your money. Just as an example between a bank deposit and arbitrage funds, one of the ways to look at is if you had put in a set of money into a bank deposit, the bank deposit yielded you a 7% interest on a yearly basis, you'd end up paying, if you are on the high tax bracket, 30% tax. Therefore, net of tax, you have a certain rate of return. On the contrary, if you did the same investment in arbitrage and if you got the same 7% annualized return, at the end of 12 months, these are considered as equity investments because, like I mentioned, you are buying and selling in the equity market at the same time. Therefore, they are considered as equity investments. Therefore, they are subjected to long-term capital gain tax of only 10%. And therefore, on account of the taxation benefit, you get a much higher post-tax return. So the differential between the post-tax return that you have in an arbitrage fund and a bank fixed deposit is quite significant, especially in times like these. Now, that's the very important reason why one must keep their mind open and look at arbitrage. Investors who would essentially benefit from arbitrage funds. 1, if you're on the high tax bracket, it makes a lot of sense to look at arbitrage funds. 2, if you're an investor who has a horizon starting from 90 days to 360 days, arbitrage funds are ideal for you. They will give you reasonably good returns, especially in times like these. 3rd, if stock markets are very volatile and you're worried about your equity investments, these are great times to park a small amount of that money into funds like arbitrage till the volatility goes away. Again, so they play a great role as a cushion against your equity market returns. So arbitrage from that perspective can be a great investment. What are the negatives of arbitrage? Like I mentioned, in times when markets are very volatile, arbitrage funds will give you great returns. But there are times when markets have been on a singular growth trajectory. In times like that, arbitrage returns can be a little lower than normal. So it's really a fluctuating time. So when markets are singular, when there is no problems around and markets are doing really, really well, arbitrage may tend to underperform. But all in all, it's a great one more investment that one needs to look at, especially for high tax bracket investors with a 1 year kind of a time frame.